U.S. markets are closed today for the 4th of July holiday, but American politics and the effect on the U.S. economy are in focus. According to Bloomberg and Reuters, investors anticipate higher inflation if former President Donald Trump regains the White House, partly because he's expected to push for tax cuts and a bigger fiscal deficit. Also, inflationary measures such as tariffs on imports. Let's get more from Grant White, portfolio manager and investment advisor at IA Private Wealth. Thanks very much for joining us. Always great to hear from you. After the debate last week at which President Biden was seen as faltering, we did see U.S. bond yields move up. That usually happens when people anticipate inflation. So if Mr. Trump wins, people think that that's going to mean higher prices.
Yeah, I mean, that's what we're seeing right now, Andy, and thanks for having me again. I think that what we're seeing right now is exactly that trade going on. Everybody's assuming that Donald Trump is going to win this election. I don't think that the debate did much to change that assumption, as we saw last week. But that's exactly what we're seeing right now. And obviously the concern with that would be with the rhetoric around tariffs and other things is that inflation, which has been the story for a long time now, is going to be a continued story heading into even 2025 and maybe beyond. I saw some scary predictions that, the U.S. might actually be might have to be forced to increase rates again, whereas everybody's hoping for rate cuts. So obviously, I think that's a bit overdone, to be quite fair. And as many of these stories are as we head into the U.S. elections, it's one of those things where I don't put too much stock into who's going to win or lose an election from a long-term market perspective, because history shows us that they don't have as much bearing as what a lot of people would think. They cause short-term volatility, and that's what we're seeing right now already. But from a longer-term perspective and from an investment thesis, we don't place too much stock in who's going to win or lose, and any short-term money shouldn't be anywhere near the stock market in any case.
What is your view on the Fed then? Do you think they are keen to reduce interest rates as soon as they get cover to do that?
Yeah, I think so. I mean, I think that's exactly what we're seeing, even in with what Jerome Powell has been saying, is that, they're going to be cautious and they're looking for more evidence and confidence that things are heading in the right direction. But I think that's exactly what we're seeing right now. And I think the jobs report tomorrow is going to further evidence that, is that we're seeing a slowing U.S. economy. And that is going to give them the cover, as you point out, to give them the rate, to do those rate cuts sometime later this year. So at this point, we still expect that we're going to see some cuts in the U.S. later this year, and overall, I think that's. It's one of those situations where bad news is good news with these types of markets right now. So I think that that's exactly what we're going to see later in the year, and I'm optimistic about that.
We are going to be talking about some ideas that you have in oil and gas shortly, but tell us about your view on crude prices. Are they headed higher from here?
This is probably one of the most challenging times to predict crude prices that I can remember, frankly. I mean, we have so much conflict in the world, and the prospect of expanded conflict, in the Middle East is doing nothing but fueling, obviously, the idea that we could see increases in oil prices. And I think we'll get a lot more clarity in that in the next few weeks, especially with what Israel decides to do and whether or not they turn their attentions to their northern border in Lebanon. So that is something that we are keeping a keen eye on. But at the same time, as I was mentioning earlier, I mean, we're also facing a slowing U.S. economy. And what does that mean for pricing? Well, that should mean a pullback in pricing. So we've got a bunch of balance and counterbalancing going on as it relates to what oil prices could be doing, not the least of which is, as you were talking about earlier, we're heading into, or we're already in, hurricane season as well, and what impacts that could have. So to try and predict where oil prices are going, that's not really a game that I generally like to play, and it's certainly a very difficult game to play right now. I think where investors need to be focusing their attention to is owning very high quality companies that can weather these storms, no pun intended, but they can weather the storms of lower oil prices if that does end up being the case. I would say the pressure is more to the higher side right now, but I wouldn't bet one way or the other on either of those.
One stock I'd love to get your take on is Royal Bank. It's trading in record high territory. It's up, well, last time I checked, it was up almost 20% in the past year. TD was down about 9%. It looks as though investors looking for a big bank stock are saying, well, this is the only game in town right now.
Yeah, I would agree with you on that. And you know, I've come on your show and talked about I don't like drama in the banks, and I still don't like drama in the banks. And RBC is one of those companies that doesn't like drama either. And so I think that's exactly the trade. It's a no drama trade, if you will, because we don't see a lot of that with RBC. They're very steady. It's obviously, I mean, they're the crown jewel of Canadian banking in terms of branding as well. And so I think that's exactly what we're seeing is almost a flight to safety. People love their banks. Canadians love our banks, you know, and so it's easy to buy RBC, and especially when you're getting such uncertainty around TD. I think we're seeing a lot of investors float that way. But RBC is a great company, and we expect them to continue to be steady. And so I don't think you're going to go too wrong. I don't think there's this great growth opportunity there. But if you're looking to have safe money with consistent yield, then RBC, there's not too many companies that you'd say are better in Canada.